Alrighty, good morning guys. It is Wednesday, the 16th of November, and in this morning's video I want to recap a trade that I closed in Google yesterday that I made about $16,000 on. I actually tried to record this video 2 or 3 times last night and was having some microphone problems, so here we are again. But as far as the Google trade, guys, and a big part of the reason I want to cover this trade is I think market willing. There could be a couple more shots like this lined up over the next couple of weeks here. So for those of you in my mastery, make sure you pay extra close attention. But we'll jump in here, guys. So a couple screenshots from yesterday. The net profit on the trade was $15,555, and a good 14,000 of that came in yesterday. So as far as the orders, let me pull this up. Let's see. Alright, there we go. So as y'all can see, on Thursday the 10th, I started buying the November 25th expiration 100 strike calls. So I bought, 50 of those bad boys at 49 cents. Bought another 45 of them puppies at 58 cents. And on yesterday's push into my target of $100, I sold them for $2.17. So average cost of about 53 cents, taking them off at $2.17. That's good for a 310% profit. And as far as a dollar profit, like I mentioned, 15,500. So last week or so here, mainly between Google and AMD, got ourselves a nice, 25,000 bucks. So there's an old saying, 25,000 bucks a week and you can have dinner at Chili's. But as far as the trade here, guys, and this is what I want you to really pay attention to. Google was the reversals trade. So if you're in the mastery, if you're in the gold room over here at Simpler, you've probably heard me talk about that reversals trade before. But I do think next few weeks here, assuming the S&Ps and the QQQ don't totally shit the bed, probably got a few more shots lined up for some more reversal trades. And I actually think Google might have another $5 or $6 here to the upside. But we'll go through this, guys. So the reversal trade, step number 1. Numero uno. We ideally want to find something oversold on the weekly chart. So that's where these Chandler channels come in handy. The gray Chandler channels, those measure one average true range move above and below the 21 EMA. And then, of course, the second set of Chandler channels, the pink ones, that measures 2 average true range moves above and below the 21 EMA. So quick look here, guys, at the settings. You should have 2 sets of Celts on your charts. So the first set is going to measure one factor from the 21 exponential moving average. So factor of 1, length of 21, average type exponential. Alright, so get one set, and then you'll get another set here with a factor of 2, length of 21, average type exponential. Alright, so we got the Chandler channels, and that is step number 1 to the reversals trade. Try to find something trading at -2 to -3 ATR under that weekly 21 EMA. That's what gives us that oversold reading. Now here's the kicker. Here is the kicker. Oversold is not enough to justify a reversal. A stock can go from oversold to really oversold to very oversold. So while it's a piece of the puzzle, step number 2 and 3, that's what really ties everything together. Alright, so step 1, find yourself something oversold on the weekly. And now where things really start coming together, guys, step 2, you got to get that first close back above your daily 21 EMA. That's kind of the first step in the right direction to potentially getting a reversal back towards, something like a key moving average. So we're oversold on the weekly chart. The bulls finally take enough control to close it back above that daily 21 EMA. And then the third step, guys, and this is what really gives you that, short-term explosive move. Once we get that close above that daily 21 EMA, on our big 3 indicator, at a minimum, we want some buy signals on the 5-minute and the 15-minute. Alright, so oversold on the weekly. You finally close back above that daily 21 EMA, and then the lower time frame buy signals tell us the 5-minute, the 15, they could go into an uptrend. And that's so important here, guys, because, this move that I caught on Google, it's not as if Google's in a weekly uptrend. It's not as if Google is suddenly in a daily uptrend. What took me from 94-ish all the way up here to $100 is trend on your lower time frames. All right, so check this out. If we look at the 5-minute chart from last Thursday, we started getting those green arrows here on the big 3 indicator. All right, what you guys can see back there. So the 5-minute chart goes bullish, then the 15-minute chart, on the very same day, that starts to go bullish as well. And as y'all can see, ever since you got those first sets of green arrows on the 15-minute chart's been in a really good uptrend. Big push to the upside, dip to the 50, nice push, nice dip, nice push, nice dip. So Google's not in a weekly uptrend, it's not in a daily uptrend. That uptrend took place on the 5-minute, the 15-minute, the 30-minute. So that's a reversals trade, guys. Your, again, 2 to 3 average true range moves away from that weekly 21 EMA. You finally crank out a close back above that daily 21, and then your lower time frames go bullish on the big 3 indicator. And that's where in a matter of a couple of days you can catch a nice, 1 to maybe 2 ATR move on your daily chart. So take that into consideration. $15,000 profit. Those 100 strike calls went up 300+%. But all that really caught here was a 1.5 average true range move. Google never even got up here towards the +2 Keltner channel. So is that a crazy move? Did I catch something that's abnormal? Not really. Google put its big boy pants on for a few days and it made about an average true range move and change. So the timing component here, guys, of course, with the out the money calls, if you can nail that move relatively quickly, that's where those calls go up 100, 200, 300%. Now the reality, of course, of buying out the money options, if Google just instead traded sideways for a few days, those 100 calls, they're going to lose a lot of premium. So you got to really nail the timing, and equally as important, you got to accept the risk. But that was the reversals trade there, guys. AMD was very much the same. So last week, AMD gets the close above the 21 EMA. Lower time frames went bullish on our big 3 indicator, and she ripped. She ripped a good one. For those of you in the Mastery and the options room, we did a very similar reversals trade 2 weeks ago on NVIDIA. NVIDIA was oversold on the weekly chart, finally closes back above that daily 21. Lower time frames go bullish on the big 3, and look at that bad boy. All the way back above the weekly 21 EMA. So for now, guys, I do think the reversals trades could offer a good plate of opportunity. Now, going back to Google, so for those of you in my group, if we get a little dip here, guys, a dip or some sort of consolidation, market willing, I think Google's got plenty more room here. So if you pull up the weekly chart again, Google's weekly 21 EMA is all the way up here around 104, 105. So my thinking is, again, market willing, we get a little dip here in Google, even something down to, say, the hourly 21 EMA. That little dip might be a good chance to buy some more cheap out-the-money calls, looking for Google to make its way towards that 104, 105 over the next handful of weeks. So we'll go to the options chain here. Trading some S&P futures this morning. But all right, we'll pull up Google. And the idea that I'm trying to work for now, ideally on a dip, December 16th expiration. So we can give this a good 30 or so days. Go out to the monthly expiration. And what I would love to do, guys, on, again, some sort of dip, try to buy these December monthly expiration 105 calls, maybe for about $1. Try to pick them up for $1, and then sure enough, over the next 2 to 3 weeks here, if the market's strong, and Google, lo and behold, rallies back up towards that falling weekly 21 EMA, well, if you're picking up those calls for about $1, and they end up either at the money or even slightly in the money, there should be a nice, minimum 100, 200% return somewhere in there. So that is the idea we're going to work for now, guys. In addition to that, we got some Oxy. Oxy's still looking pretty sharp here. You got your weekly squeezes, you got squeezes on the 3-day chart, you got squeezes on the daily chart, the hourly chart. It's a big old squeeze fest over here in Oxy. So we're still looking for a push here towards $80, and outside of that, guys, kind of taking things day by day. Of course, last week you got a big break in the dollar, which is, really good here for the bulls. And the S&Ps, even though they've traded kind of mostly sideways here this week, you've got some massive improvements in the structure from, an hourly chart all the way up to even a weekly chart. So expect a couple of dips, expect some shenanigans, but I do think right now the stage is potentially set for this market to continue to grind higher. I think ultimately, probably all the way back towards the weekly 50, which right now is around 41.80. And pretty much, guys, that would be a mirror image of the move that we saw back here in August. So we're going to take it day by day, being focused and being disciplined as always. But there you have it, guys. 15,500 in the bank from the Google reversal trade. We get a little dip here. I'm thinking December monthly expiration, 105 calls. Might be another nice trade somewhere in there. So as always, guys, hope you found this helpful. If you haven't already, go on ahead and hit the like and subscribe button. I appreciate it. And if you haven't, check out the $7 30-day trial to the mastery with that link in the description. Have a great day, guys. Hope you're trading well. Hope you're doing well. Hope you're good and healthy. And I'll talk to you soon. Adios.